Welcome to our channel. Today, we're going to talk about how to invest like a financial guru. We all want to make the most of our money, but not everyone knows where to start. That's where the financial gurus come in. They have years of experience and knowledge. In this video, we're going to break down their strategies and show you how to invest like a financial guru. Before we dive into the strategies of financial gurus, it's important to understand why investing is so important. Investing allows your money to work for you, meaning your money grows over time without you having to do any extra work. It's like planting a seed and watching it grow into a tree. Investing also helps you to build long-term wealth and achieve your financial goals. Now let's get into the strategies of financial gurus. Strategy number 1. Diversify your portfolio. Diversification is the key to reducing risk in your portfolio. A diversified portfolio means that you own different types of assets, such as stocks, bonds, and real estate. This means that if one asset performs poorly, your overall portfolio won't be affected as much. Financial gurus like Warren Buffett and Ray Dalio swear by diversification. Diversification is protection against ignorance. It makes little sense if you know what you are doing. To diversify your portfolio, you need to invest in different asset classes, different sectors, and different geographical regions. This helps to spread your risk and reduce the impact of any one investment performing poorly. Strategy number 2. Invest for the long term. Financial gurus always advise investing for the long term. This means that you should be looking at investments that will grow over time and not try to make a quick profit. Investing for the long term means that you're more likely to see consistent returns over time, and it's also less stressful than trying to time the market. The biggest mistake investors make is to think that what happened in the recent past is likely to persist. To invest for the long term, you need to have a clear investment strategy and stick to it. You should also make sure that you have a diversified portfolio so you're not relying on one particular investment to grow your wealth. Strategy number 3. Focus on value, not price. Financial gurus like Benjamin Graham and Peter Lynch always focus on the value of an investment, not the price. They believe that you should buy stocks that are undervalued and have the potential to grow in the future. People who succeed in the stock market also accept periodic losses, setbacks, and unexpected occurrences. Calamitous drops do not scare them out of the game. To focus on value, you need to do your research and look for stocks that are undervalued based on their intrinsic value. This means looking at the company's financials, its growth potential, and its industry outlook. You should also be prepared to hold on to an investment for the long term, even if it experiences short-term setbacks. Strategy number 4. Keep your fees low. Financial gurus like John Bogle and Jack Schwab always advise keeping your fees low. This means investing in low-cost index funds, which track the performance of a market index, such as the S&P 500. By choosing index funds, you can avoid the high fees associated with actively managed mutual funds, which try to beat the market. These fees can eat into your returns over time, and even a small difference in fees can have a big impact on your overall returns over the long term. Low-cost index funds not only provide diversification across a broad range of stocks, but also have lower operating expenses and turnover, resulting in higher returns for investors. Additionally, some online brokerages offer commission-free trades for certain types of index funds, further reducing costs for investors. By keeping your fees low, you can maximize your investment returns and achieve your financial goals faster. In conclusion, keeping your investment fees low is an important factor in achieving your financial goals. By investing in low-cost index funds, you can avoid high fees associated with actively managed mutual funds and benefit from diversification, lower operating expenses, and higher returns. With the availability of commission-free trades offered by some online brokerages, investors can further reduce their costs and maximize their investment returns. Following the advice of financial gurus like John Bogle and Jack Schwab, and investing in low-cost index funds can help you achieve your long-term financial goals faster. Thank you for watching the video.